Hello, welcome to the Global View on this Thursday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz. Let's get across those moves overnight. Global investor sentiment turning negative on the escalation of hostilities between the US and Iran, with oil rising, gold plunging. Iran has declared the Strait of Hormuz closed, while US forces have launched fresh attacks on Iran after President Trump warned that the country would be hit hard if no peace deal is secured. Investors on Wall Street also considering the latest US inflation data, which showed price growth accelerated. The chip makers led the losses, with the semiconductors index down more than 3.5%. Stocks, specifically Nvidia and Broadcom, were among the biggest drags on the S&P 500, with investors worried about stretched valuations. And after the closing bell, Oracle reported quarterly capital expenditures that were higher than estimates, raising investor concerns about the profitability of the company's AI infrastructure business. Supermicro Computer tumbled almost 28% after announced plans to raise $7 billion through a series of equity and linked financing transactions to fund components purchases for its growing AI server demand. Qualcomm also caught up in that sell-off. Shares of trucking companies fell after Amazon announced expansion of its less-than-truckload freight services in the US. The energy majors track the price of crude higher, whereas the top gold miners follow the price of bullion lower. Well, the US military has launched strikes against Malta, according to US Central Command, for what it calls unwarranted and contingent aggression. This comes after President Trump warned that US forces would strike Iran again if no peace deal is secured, saying we're going to be attacking them very hard. Well, overnight, the US military targeted air defense and radar sites around the Strait of Hormuz. That was after a US attack helicopter was downed near the strategic waterway yesterday. Iran responded with missile and drone attacks on US bases in Jordan, Kuwait and Bahrain, with reports of little significant damage there. Now, meanwhile, in the US, consumer inflation increased 4.2% in the 12 months through to May, its fastest pace in 3 years, boosted by surging energy prices fueled by the Middle East conflict. Excluding the volatile food and energy components, core CPI increased 2.9% year on year. Petrol prices accelerated 7% over the month, to be up 40% from a year ago. US Treasury yields were mixed following the data and the escalation of tensions in the Middle East. The 2-year was at 4.13%, the 10-year up to 4.55. Australian 3-year government bond yields, they've slipped to 4.5%, the 10-year at 4.91%. US dollar index up slightly. The Aussie has fallen back to 70 US cents. Well, Iran's Joint Military Command says the Strait of Hormuz is closed and that any vessel that attempted to pass through the strait would be targeted. Oil prices surged after President Trump threatened to attack Iran, although prices then paired gains after the president said the US military had escorted ships carrying more than 100 million barrels of oil out of the Strait of Hormuz. Brent crude futures up around 4% to near $95 a barrel. Gold has fallen more than 4% on renewed fears about escalation of the Middle East conflict and rising inflation. Spot gold currently trading at around $4,070 an ounce. Copper futures fell 1.5%. Iron ore is up to 103 US a ton. And Bitcoin trading at around 61,500 US dollars. Well, lots to discuss on markets, particularly those geopolitical implications. Let's catch up with Ira Epstein from Linn Associates. Ira, welcome back to you. There is so much to consider as an investor at the moment. Let's start with the latest out of the Middle East. How do you see that playing out in markets? Particularly oil, obviously, is going to be watched closely.
Well, it's watched closely, but it's not doing anything. I mean, it goes up $2-3 a barrel, big deal. It's not back to the 108, 110 level. It's trading in Brent. Look at it as we're talking. In fact, it's about 90. Yeah, it's trading at 95. That's what I thought, around the $95, about $2.50 higher right now. It got as low just recently as 92 or so. So it's not a big deal. What the market realizes is that sooner or later, and it's happened, the other Trump is going to be coming out of the bottle. And he's coming out of the bottle not because of Iran. It's inflation that's got his attention. It's all over the news in America, how the inflation's going. In the morning, we get the PPI. They're looking for the headline number to come up 0.7, and they're looking for the core PPI month over month up 0.5. So you add this together, and now he's hurting the middle class American. Middle class American is finally seeing that inflation is increasing more than his wages are, and that's not leaving him with the dollars that he needs. So the president is listening, he's watching, and it's about time that he becomes the aggressor here. We have all those ships, we have everything there. They're hitting Bahrain, they're hitting Kuwait, they're hitting Saudi Arabia. Whatever they want to hit, Iran is hitting. Go get them. It's really that simple.
Well, the question remains if that is the end game, Ira, to how this pans out, given it has dragged on for so long. Now, you talk about how the consumer, in fact, is feeling at the moment, obviously with those rising prices, but also real wages being negative. How is that playing out then in terms of what we're seeing with consumer spending behaviour, and would you expect that is going to flow into corporate earnings?
Why don't we take a look at the markets? What markets are up? None to speak of. Out of 11 sectors today in the stock indices, 4 were up mildly. You got to go to places that are completely away from AI and computers in order to see gains. A few of them gained. I mean, Palo Alto, which I told my clients just this week to buy it, and knock on wood, they're a little ahead, but it's a beginning position, and we'll see what the market can do. It's one. But more times than not, I'll tell you, Andrew, I had the worst weekend. I turned profits into a loss in the stock indices on Friday. I had profits, I lost on it. Knock on wood, I had my clients, not me, but I had my clients short in cotton in the Japanese yen of all things. And the cotton turned out to be a monster, as it turns out. But that's what's happening to traders. What was good 20 minutes ago isn't good right now. And when we look at the overall market, the gold market's down and down super hard. The silver market is down 50%. You realize that from its recent high, it is now given back 50%. That's not a little break in the market. That is a monster break by any situation. At 62.65 in the July contract, we were just at $120. $120 an ounce. It's hard to believe that. So when we look at it, where's safety? There is none. The only place that you can be is gradually taking on short positions, be it the grain market, be it the meat markets, the soft markets, be it the stock indices, be it the currencies against the US dollar. That'll change in time, but right now that's where we're at. And if you're in AI, you are not wanted right now. It's really that simple. Oracle came out this afternoon with really solid numbers, but they're spending too much on AI. Their spend went up 10% more than they thought, and because of that, right on down 2.5%, 3% as we're talking. So anything where you're spending on AI is getting in trouble.
Well, I mean, we've been talking about that for a while, haven't we? Just those eye-watering amounts of CapEx. Right. Maybe the penny has finally dropped, Ira, in terms of market participants there.
Well, here's what some think is going on. Some think that the SpaceX IPO took money out of certain areas, and those that can get the stock will buy it. I predict they'll dump it as fast as they get it. It's overvalued. That's my opinion. People are buying the cum in this. Why do you have to get in and buy it at this price for the cum? I know people will say it's going to come out and double right away. That is the common thinking that people have. I can't say it won't. I don't know. What I do know is that right now, the inflation numbers are of such that the Fed is talking, do they rate hike, not cut? Number two, there's no one that I read that says that even if the Strait of Hormuz is going to open right away, that you're going back under $70 Brent right away, and higher prices are going to linger. Well, as long as they linger, we fight the inflation. Number three, you went parabolic in stock indices. Parabolic moves in one way, sharp corrections. I've done this 60 years. I've seen parabolic moves up and down. They end one way. Nobody tells you when they're ringing the bell, which has just happened in the stock market, and all of a sudden, everything that's good, the numbers that were just like they were before, the earnings just like they were before, are considered they're not good enough, and the markets go the other way. That too will end. And what we're really doing, and our listeners have to listen, is we're taking markets back to more normal price earning ratios in individual stocks. As for the commodity markets, they got ahead of themselves. They'll come down here, but inflation isn't going away. Ultimately, gold will be good, but it's not yet.
And Ira, as you say this, so the president acutely aware of where inflation is at the moment, how it is hurting the US consumer. What levers does he have to pull there, other than obviously what he's doing in Iran right now? In fact, we just heard from Pete Hegseth, the Secretary of War, saying they're going to bomb Iran to the negotiating table. We'll see if that transpires. But what else? What other levers can he pull?
But that's the lever. You've got the lever. Don't pass over it. The lever is to end the war. You can't negotiate with them to end the war the way that we've been doing it. You have to cause pain, lots of pain, not just pain of money. You have to cause more pain. And when you finally take it all out, they'll talk. Not the way that they're talking now, but according to rules that normal countries talk. All that Iran does is they'll use Hezbollah, the Houthis, whatever it is, to create a situation and a roadblock so they don't have to reach a deal. They just did it a week ago in Israel. They will use whatever means they can because our president, gave them the upper hand in this negotiation. What you're looking at now is he's taking that back.
Yeah, well, to your point, Iran has certainly been playing the long game, haven't they? It's been come into a war of attrition. We'll see how that develops over the next few days. Ira, terrific to catch up as usual. Thanks for joining us from Linn Associates.
Thanks for having me.
So with all that in mind, let's take a look at where we're likely to open on the local market then. Perhaps not surprisingly, the S&P ASX 200 SPI futures there down 0.75%, reflecting on what we saw on global markets overnight. Close eye on oil prices, but as we were just talking about, perhaps a little more benign in terms of those movements, given that the US and Iran are exchanging hostilities as we speak. Join us for the Open in just a moment.